Imagine a physical bottleneck so severe that it's actually actively forcing smartphone makers to downgrade the device that you'll probably buy next year.
Yeah, it's wild.
Right. And while it's doing that, it is simultaneously driving a single tech sector past the $1.29 trillion mark in just 1 year.
Which is just a massive number.
It really is. I
Yes.
mean, we are watching a scenario where the world's most advanced software companies are behaving less like innovators and more like, nations scrambling for rare earth metals.
Yeah.
So welcome to the 2026 memory squeeze.
It is honestly just an incredible collision to witness. I mean, we've spent decades being conditioned by Moore's Law, right?
For sure.
We just believe computing power continuously scales up while getting cheaper. But today, the limitless ambition of artificial intelligence is just crashing headfirst into the very rigid, very unforgiving laws of physical manufacturing.
Which brings us to the actual stack of sources we are diving into today. We have a lot to cover.
We really do.
Yeah, we have a brand new April 2026 market forecast from IDC, some May 2026 market share data from Present AI, and detailed financial analysis from Meritz Securities and Mirai Asset Securities.
Plus some really great recent tech and market reporting from WCF Tech and the Star.
Exactly. It's a phenomenal cross-section of data. And our mission for this deep dive is basically to help you understand why memory chips have unexpectedly become the ultimate bottleneck of the entire AI revolution.
Right, the thing holding everything back.
Yes, exactly. We're going to explore how an unprecedented supply shortage is reshaping the tech landscape all the way through 2030. And most importantly, we will decode what this high-stakes corporate battlefield actually means for you.
Because it really does affect everyone.
It does, whether you are actively managing a tech portfolio, holding out for a new laptop, or just watching generative AI evolve. Understanding this memory squeeze is basically the ultimate cheat code to grasping the modern tech economy. So, okay, let's unpack this.
Well, to fully appreciate the scale of this, we need to look at the macro picture from that IDC forecast you mentioned.
Yeah, let's start there.
The sheer volume of capital moving through the semiconductor space right now is, it's honestly difficult to comprehend.
The numbers are staggering. Total semiconductor revenues hitting $1.29 trillion this year represents a 52.8% jump from last year.
A massive leap.
Right. But the real story is hiding inside that broader number. The memory segment is the absolute epicenter of the earthquake here.
It really is the main driver.
Yeah, I mean, DRAM revenues, so that's dynamic random access memory, they're projected to nearly triple in 2026, hitting $418.6 billion all on their own.
Just for DRAM.
Just DRAM. And the non-memory segment is growing to $693.5 billion, which, is a solid year, but it is completely eclipsed by the sheer gravitational pull of memory.
What's fascinating here is that this explosion is not being fueled by consumer electronics.
Right.
Or even standard enterprise upgrades. It is being driven almost exclusively by hyperscalers. So the top-tier cloud providers who are building out this foundational AI infrastructure.
Okay, I want to push back on the prevailing narrative here for a second, though.
Sure.
Because when most people think about AI, they picture the software interface, right? Or maybe they picture NVIDIA's GPUs.
Of course, the graphics cards.
Right. The processors are heavily marketed as the brains of artificial intelligence. So if the processor does the thinking, memory is historically just, the filing cabinet. Why is the filing cabinet suddenly the star of this trillion-dollar show?
Well, the filing cabinet analogy kind of falls apart completely when we look at generative AI and agentic workloads.
Okay, how so?
A much better way to conceptualize this is imagine a high-end industrial kitchen. NVIDIA builds the world's greatest, fastest chef that's the GPU.
Okay, I'm with you.
And this chef has the ability to chop like 1,000 onions every single second.
Which is terrifying, but okay.
Right. But if the kitchen staff, which represents the memory, if they can only hand that chef one onion every minute, the chef's speed is completely irrelevant.
Oh, wow. The chef just stands there waiting.
Precisely. Generative models evaluate billions of parameters simultaneously just to predict the next word or, render an image.
So it needs constant feeding.
Exactly. That data has to be fed to the processor at an unimaginable speed, continuously. Standard memory architecture simply cannot keep up with that data hunger. The processor essentially starves.
So they needed a different kind of kitchen staff entirely.
Yes, they needed high bandwidth memory, or HBM, alongside advanced DDR.
And that's where the massive spending comes in.
Exactly. IDC points out that hyperscalers are expected to spend a staggering $600 billion in capital expenditures just in 2026.
That is $500 billion.
More than half, yeah. And a massive portion of that is going directly toward acquiring HBM. AI is no longer just a catalyst driving a temporary spike in demand.
It's the baseline.
Exactly. It is now the demand foundation for the entire industry. The models simply cannot execute without this specific silicon.
Okay, so if high bandwidth memory is the literal fuel for the AI engine, then the companies capable of manufacturing it aren't just parts suppliers anymore.
No, they hold all the cards.
They essentially dictate the pace of global AI development. And looking at the present AI data for May 2026, the corporate battlefield controlling this supply is super fascinating.
It's a very tight race.
It is. SK Hynix sits firmly on the throne right now. They are the undisputed hegemon, holding between 50 and 62% of the overall HBM market share.
A massive lead.
Yeah. Samsung trails them at 25 to 40%, and then Micron rounds out the top three at just 5 to 20%.
But those overall numbers kind of tell a story of dominance that masks a really vicious turf war happening under the surface.
Oh, definitely.
Specifically regarding the allocations for NVIDIA's next-generation GPUs.
Yes, and that brings up the biggest competitive upset of this entire hardware cycle. Micron, the company with the smallest overall market share, has actually managed to overtake Samsung on some of NVIDIA's allocations.
Which is huge.
It's crazy. This is for the upcoming generation of memory, called HBM4. Micron snagged roughly 20% of that allocation, which effectively pushed Samsung into the mid-20% range.
Yep.
I mean, it's like the bronze medalist suddenly stealing the silver spot right before the Olympic finals.
That upset really speaks to the sheer difficulty of the generational technology shift we are experiencing right now.
Because it's not a small upgrade.
Not at all. Currently, in 2026, a generation called HBM3E dominates shipments. It accounts for roughly 67% of the market.
Right.
But the battle lines for the future are drawn around HBM4. And from an engineering perspective, HBM4 is just a complete paradigm shift.
Well, I want to dig into the physics of that for a second. The sources note that HBM4 doubles the interface width to 2048 bits.
Yes.
Now, I have heard tech journalists compare this to, like, doubling the lanes on a highway from 1024 to 2048. But honestly, that feels a bit hollow. What does that actually mean for the physical hardware?
A much better visual for this is water pressure.
Okay.
Standard memory is like trying to drain a swimming pool through a plastic drinking straw.
Oh, that sounds frustrating.
Very. HBM4 is like attaching a municipal fire hydrant directly to the processor. It pushes bandwidth to between 1.5 and 2 terabytes per second per stack.
Wait, per stack?
Per stack, capping at 64 gigabytes of capacity.
Terabytes per second flowing through a chip that is, what, no bigger than a postage stamp?
Exactly. And that introduces the real engineering nightmare here, which is thermal dynamics.
Heat.
Yes, immense heat. When you push that much data through microscopic channels, you generate a ton of it.
Because of the friction, essentially.
Right. And these chips are manufactured by literally stacking layers of silicon on top of each other and then punching microscopic holes through them to connect the layers.
So the challenge isn't just widening the pipe, it's keeping the pipe from literally melting itself and the processor next to it.
You nailed it. And that thermal challenge is the exact reason Micron is stealing market share right now.
Because they figured it out faster.
It all comes down to execution on these extreme specifications. Micron proved they could sample HBM4 at data rates up to 11 gigabits per second, which was faster than Samsung anticipated.
Wow. And what about SK Hynix?
Concurrently, SK Hynix is maintaining its lead by claiming a 40% power efficiency improvement over the previous generation, all while running at 10 gigabits per second.
So NVIDIA just goes with whoever has the best specs.
Exactly. NVIDIA allocates orders based purely on who can deliver those bleeding-edge thermal and speed specs today.
Okay, but if these HBM4 chips are this critical, and demand is virtually bottomless right now, a logical observer would just ask, well, why don't these companies just pour concrete and build 10 more factories?
Ah, that is the trillion-dollar question right there.
Right.
The answer lies in the unforgiving physical constraints of semiconductor manufacturing. It's not that simple.
Let's talk about the wafer space, because this completely blew my mind when reviewing the present AI data.
It's a crazy metric.
It is. So silicon chips are printed on flat circular plates called wafers. And factory capacity is measured purely in how many of these wafers a facility can actually process in a single month.
Correct.
It turns out printing high-bandwidth memory consumes about 3 times the physical wafer space of standard DDR5 memory.
It is a brutal zero-sum game.
3 times the space.
Yes. A silicon wafer is fixed physical real estate. Every time a manufacturer chooses to print a high-margin HBM chip for an AI server, they are physically forced to not print 3 standard memory chips.
So feeding the AI data center inherently starves the consumer electronics market.
Exactly the case. It sparks a consumer RAM and consumer GPU memory crisis.
Because you can't have both.
Right, because there's only a finite amount of silicon real estate available globally at any given moment.
And the projections for this shortage are honestly terrifying for anyone trying to source hardware right now.
Oh, they're grim.
The Meritz Securities report features analysis from Kim Sunwoo, who notes that DRAM fulfillment rates, which, by the way, is the percentage of customer orders a factory can actually fulfill those rates, will hover around 75 to 80% in the second half of 2026.
Meaning 1 out of every 5 chips ordered by a hardware manufacturer simply will not be delivered?
Just won't show up. And the trajectory only gets steeper from there. Kim predicts that fulfillment rate will plunge into the 60% range by 2027.
Which is practically unheard of.
SK Hynix's own CEO actually stated publicly that the global memory industry is facing its worst ever supply shortage in 2027, and he expects it to stretch well beyond 2030.
When the CEO of the world's leading supplier publicly admits they won't be able to meet global demand for the next half-decade, it fundamentally alters the psychology of the market.
Buyers begin to panic.
Gig time.
Well, here's where it gets really interesting. The USI Hevedev Tech report details exactly how that buyer panic actually manifests on a corporate balance sheet. Yes, the contracts. Micron has recently signed 16 strategic customer agreements, or SCAs.
Right.
These are 5-year, non-cancelable take-or-pay contracts featuring built-in price ceilings and floors. Through these 16 agreements alone, Micron has locked in over $22 billion in financial commitments.
A staggering amount of money.
And wait, $18 billion of that is paid in cash up front.
Upfront cash deposits of that magnitude are virtually unheard of in this sector.
It's insane.
It really illustrates the sheer desperation of these hyperscalers. I mean, they cannot risk having a multi-billion-dollar AI cluster just sit idle because they are missing the memory chips.
But I have to challenge the logic of the buyers here, though.
Okay, why?
Locking into a 5-year, non-cancelable contract in the semiconductor space just sounds like financial suicide. I mean, tech moves incredibly fast.
That's true.
What happens if a totally new chip architecture drops in 2 years? These hyperscalers are contractually bound to buy billions of dollars of potentially obsolete memory. Are memory makers just exploiting the current AI hype to trap buyers before the bubble pops?
If we connect this to the bigger picture, the dynamic is far more symbiotic than predatory.
Okay, explain that.
The Meritz Securities report clarifies that these agreements are strategic risk management for both sides.
Walk me through the manufacturer side of that risk.
So building a new semiconductor fabrication plant, a fab, costs upwards of $20 billion and takes years to complete.
Right.
Historically, the memory market was incredibly cyclical. Companies would spend billions building a fab during a boom, only to have the facility open during a bust.
Devastating their balance sheets.
Exactly. So by securing these 5-year take-or-pay contracts, companies like Micron and SK Hynix are de-risking their expansion.
I see.
They guarantee the revenue before they even pour the concrete for the new factory. They are smoothing out that historical boom and bust volatility.
And for the hyperscaler, committing $18 billion in cash is painful, obviously, but having a data center sitting empty while your competitors launch a superior AI model
is fatal. Precisely. They are buying guaranteed capacity in a constrained world. And importantly, this squeeze is not just isolated to the short-term processing memory either.
Oh, right. That makes perfect sense. Artificial intelligence doesn't just need lightning-fast short-term memory to process equations.
Nope.
It requires immense permanent storage for all those petabytes of training data.
Which triggers an equally fierce boom in the NAND storage market.
Yeah, the Meritz Securities report outlines this beautifully. NAND revenues are forecast to hit $174.1 billion in 2026.
Another huge sector.
The analysts actually had to revise their forecast for enterprise SSD bit growth upward to 76.9%. We are seeing major NAND manufacturers like Kioxia experience average selling price jumps of over 40%.
Which is incredible pricing power.
It is. And this dynamic creates a fortress of an advantage for SK Hynix because they are a full-stack manufacturer.
Right, they do both.
Yeah, they produce both the bleeding-edge DRAM and the high-capacity NAND. So when a hyperscaler wants to outfit a new data center, SK Hynix can just negotiate the entire memory ecosystem in one single stroke.
While the enterprise side of the industry celebrates those margins, though, the ripple effects on the consumer side are honestly severe.
The IDC data on the broader market definitely paints a bleak picture for the gadgets in our pockets.
It does.
The mobile smartphone sector is projected to see revenues shrink to $89.8 billion in 2026. And given how heavily reliant we all are on phones, that contraction feels really counterintuitive. Are consumers just, holding on to their older devices longer?
Well, the contraction is driven by the cost of manufacturing, not a sudden drop in consumer desire.
Really?
Yeah. Because memory prices are surging globally across all categories, memory components are eating up an unprecedented portion of the bill of materials for consumer electronics.
Oh, I see. So a smartphone manufacturer budgeting to build a $900 phone suddenly finds that the memory chip alone costs like 40% more than it did 2 years ago.
Exactly. And they are faced with a brutal choice.
Other options.
Well, they can accept razor-thin profit margins, they can raise the retail price of the phone to $1,200, or they can aggressively downgrade the internal specifications of the device.
Oh, wow. Meaning the new laptop or phone you buy in 2027 might actually feature less RAM than the model you purchased back in 2024, simply so the manufacturer can hit a psychological price point.
Yes. The everyday consumer is serving as the shock absorber for the AI industry's memory demands right now.
That's crazy.
And automakers are facing the identical dilemma with the infotainment and autonomous driving systems in new vehicles.
This actually brings us to a glaring financial paradox in the source material.
Okay, let's hear.
We have established that memory makers are generating unprecedented revenues, right? They hold unbreakable 5-year contracts backed by $18 billion in upfront cash. And they possess total pricing power over the consumer electronics industry. Yet earlier this year, there was significant panic and sell-offs in semiconductor stocks. Why would Wall Street bet against companies holding a royal flush?
Well, Wall Street is frequently blinded by its own historical models.
How do you mean?
As we discussed earlier, the semiconductor industry has historically operated on vicious boom and bust cycles.
Right, the cyclical nature.
Yeah, so investors have been trained over decades to believe that every period of record profit is immediately followed by a catastrophic oversupply.
Ah, I get it.
So the market is projecting this myopic fear that hyperscalers will just suddenly halt their capital expenditures in 2027, leaving the memory makers with all these empty factories.
But the WCF Tech data on those take-or-pay contracts explicitly disproves that fear.
Yeah.
The hyperscalers legally cannot stop buying.
Exactly, which is the core thesis of the Meritz Securities report.
Yeah.
The analysts are waving a massive flag, signaling that the market is severely mispricing the structural reality of these companies.
The valuation metrics are truly anomalous when you look at them. I mean, look at the forward price-to-earnings ratios for 2027. SK Hynix is trading at a historic low of 3.5x. Samsung is sitting at 3.9x.
Which is incredibly low.
Yeah, for anyone listening who doesn't track equities daily, a PE ratio that low typically indicates the broader market expects the company's earnings to completely collapse.
But all the data points the other way.
Right, all the physical supply chain data points to earnings being locked in and primed to grow.
It represents a classic contrarian opportunity. The market is pricing in a cyclical bust, and they are completely ignoring the structural transition to AI as a baseline utility.
And the companies themselves certainly see the disconnect.
Oh, for sure.
Samsung is aggressively initiating share buybacks. SK Hynix is telegraphing potential special dividends to reward their shareholders. And institutional analysts are finally, waking up to this.
They are catching on.
Barclays recently initiated an overweight rating on SK Hynix, setting a very aggressive $330 price target on their American depository receipts.
And the market reaction to that Barclays note was swift.
Very swift. The Star reported that SK Hynix shares jumped 12.7% in Seoul almost immediately.
Wow.
And their U.S. receipts surged nearly 28% on the NASDAQ. Institutional money is realizing this is not a standard supply cycle. It is a permanent resetting of the technological floor.
The demand baseline for silicon will simply never return to pre-2024 levels.
So what does this all mean? Synthesizing all of this data, the undeniable takeaway is that memory allocation is the new kingmaker of the global economy.
Without a doubt.
The artificial intelligence labs that successfully secure the largest allocations of NVIDIA HBM4, which ultimately traces back to the manufacturing execution of SK Hynix and Micron, those are the labs that will release their models faster and cheaper.
It all flows downstream.
Hardware supply chains are dictating the speed of software innovation now. And meanwhile, for you, it perfectly explains the hidden forces making your next consumer device more expensive and less powerful than you might expect. The AI revolution is just devouring the global supply of silicon, and it's leaving everyone else to fight over the scraps.
But this raises an important question, which is actually touched upon in the closing thoughts of the WCKF Tech report.
Oh, what's that?
We know high bandwidth memory is colliding with a physical memory wall right now.
Right, the heat and the space.
It consumes vast amounts of fixed wafer space, it is a nightmare to cool, and the packaging complexities are nearing their physical limits.
Like we said, attaching that fire hydrant to the processor can only work for so long before the physics simply say no.
Exactly the issue. So as we look past 2028, the industry must ask if entirely new experimental architectures currently in research and development will step in to shatter that memory wall.
Oh, right. The report mentions some wild concepts like Qualcomm's HBC, SanDisk's HBF, and Intel's Xeon memory architectures.
Yes. These are radical, highly experimental approaches to integrating compute and memory at the atomic level.
Wow.
If these architectures prove viable at scale, they could theoretically offer double the bandwidth of HBM4 without requiring the same massive physical footprint or thermal overhead.
Which leaves us with a wonderfully brutal thought to end on today.
Let's hear it.
Could the current undisputed titans of HBM companies like SK Hynix, Samsung, and Micron, could they find their flagship technology rendered completely obsolete at the exact moment they achieve maximum market dominance?
You know, history shows that in the technology sector, your moment of absolute triumph is usually the exact moment an engineer in a competing lab figures out how to make you irrelevant.
It is a ruthless and endlessly fascinating ecosystem. Keep a close watch on those experimental technologies in the coming years, because if the architects building the skyscraper of artificial intelligence run out of steel, they will simply invent a new metal.
Well said.
Thank you for joining us on this deep dive into the 2026 memory squeeze. We will catch you next time.